because no doubt people will join when they realize the time. I'm Kathy McPherson. I'm the Vice President of Research and Policy at the Greenbelt Foundation, and I also work on the Greenbelt Fund. I'd like to thank everyone for joining us this afternoon to take the time. We appreciate it very much. Before I make some introductory comments, I'm going to just let you understand what the opportunities will be for your participation this afternoon. So the report's author and presenter today, John, who you can see on the screen, has organized his presentation into 3 sections. And at the end of each section, we'll pause, and he's going to stop and take your comments or questions and discuss them, respond to them. But you don't have to wait until then. You can, as he's actually going through his deck, input your question or comment at any point by clicking the Q&A and just putting it in there. Or you can also use the raise hand function. After John's completed a section, then my colleague Anna, shortly you can see her name there on the screen, she's going to introduce the first person that she sees in the question line, or the raise hand, whatever, and we'll introduce that person and unmute them so that they can ask a question and then take it through till she finishes however many there are, and then John will continue on to the next section. I would just ask that you don't put anything into the chat box, as that can make it a bit confusing for Anna to keep track of the questions or comments that people have. So as some of you would know, we had some analysis done a few years ago that looked at the possibility of replacing imported produce with Ontario-grown produce. And it determined the economic impact to do that of just the top 10% of the top 10 fruit and vegetable imports with Ontario-grown produce would be result in an additional 250 million in GDP, as well as close to 3,500 additional full-time equivalent jobs. We sort of left it at that point, but last year we decided we should really take a look and try to drill down to better understand what those opportunities really are and look at some specific crops. So to do that, we had the benefit of a great working group. Alison Robertson, who's the head of the Ontario Fruit and Vegetable Growers, as you probably all know on this call, Jason Bent from the Ontario Federation of Agriculture, Stephen Duff, Chief Economist from OMAFRA, Aaron Atchison, who's from Agriculture and Agri-Food Canada, based here in Ontario though, and Janet Horner from the Golden Horseshoe Food and Farming Alliance. So they were very useful to provide input at different stages in the research, and we'd like to thank them very much for their contributions. So John is going to take us through reviewing what the factors were that help shape fruit and vegetable production in Ontario, and those were the ones that were used to then identify a short list for him to do some further in-depth analysis that he's going to review with you. As you will learn towards the end, the opportunity does exist for all 6 of the crops that we looked at: strawberries, fresh grapes, pears, eggplant, sweet potatoes, and garlic. But of course, the extent of that opportunity varies, and it depends a lot on what the constraints are for the individual crops. In all cases, John's also going to explain the kind of prerequisites that are necessary to actually realize that opportunity. They vary again, but some of them are common across all 6 crops. So over to you, John, to take it away.
Good afternoon, everyone, and it's my pleasure presenting to you over the next hour some of the findings for the report that I did for the Greenbelt Foundation. So as Kathy mentioned, I'm going to split the report or the presentation into 3 parts. First of all, I'm going to briefly speak about the operating environment for fruits and vegetables. Then I'll be looking at those crops that we assess for expansion opportunity, and then from that flows, what are some suggested actions to support the expansion? So from a context point of view, the fruit and vegetable sector in Ontario is about a $2.2 billion industry. More than half of that actually comes from greenhouse vegetables at $1.3 billion. And then followed by field vegetables, a little over $500 million, and then fruit at a little around $400 million. And so what's of interest to me anyway, as an agriculture economist, is that the value per acre for fruit averages about $6,000 an acre, and that can go up to about $17,000 an acre for strawberries. And if you look at field vegetables, the average value is a little over $4,000 and can be well over $8,000 an acre for some cole crops. If we look at the trade position of fruits and vegetables, Ontario is in a trade deficit. So that, for example, on the fruit side, we're about a $4 billion deficit. And that, of course, is because of a lot of a number of fruit crops that are tropical in nature that can't be grown in Ontario. On the vegetable side, we have 1.8 billion of exports. A lot of that is through our greenhouse vegetable sector, but also field vegetables. But still, we have a trade deficit of 1.3 billion. And then if we combine them all, we have a trade deficit of about $5.3 billion in 2018. So just looking at these numbers, it suggests there is clearly an opportunity to replace some of our imports with local production. When I start looking at some of the crops, these statistics here reflect the import share of our crops. So for example, on fresh grapes, that 99% means that 99% of what's consumed in Ontario comes from import supplies. And then you'll see going on the fruit side, it goes down to pears, 88%. So what does that mean? 12% of our consumption in Ontario is based on Ontario grown pears. And then as we go down that list, we see that peaches is around 50% and blueberries 21% imports. If we look at the vegetable side, garlic is at 90%. So that means that we're supplying about 10% of our needs. And that flows to, let's say, sweet potatoes, which is about 50%. And then to some root crops like carrots and parsnips. There's the large majority is from Ontario-based production. So just looking at the import shares, one again comes to the conclusion there is some opportunity for expansion of Ontario production. This next slide here is showing the importance of market access. One of the findings that came from the study that may be obvious to many, but market access is key for expansion. And so this illustration is showing that growers on the lower left-hand side of this diagram, they can either go into farmer markets or niche markets, so that's one market channel, or if growers are large enough and they have critical mass, they can go direct to retail or food service buyers. Or they can go direct into, let's say, wholesale markets or like the Ontario Food Terminal, or that dotted circle is saying, or the dotted oval is saying that growers have a relationship with a marketer to access these opportunities in wholesale and other markets. And at the same time, we're competing, or Ontario growers are competing with importers that either go direct to retail and food service, or again, use the intermediary of marketers wholesale in the wholesale function. When we look at production, what is interesting is it appears that scale matters. So these statistics here show what percent of the farms have 90% of the acreage. So for example, apples at 26%. So that means that 26% of the apple farms account for 90% of all apple acreage. And then in brackets, the 51 means that that's the average acre for those farms that are representing 90% of the acreage. If we go to pears, that's 32% of the farms, and the average orchard there is 8 acres. If we go to peaches, 35% of the farms and 55 acres on average. Going over on the vegetable side, we see that broccoli, that 5% of all broccoli farms account for 90% of the acreage. And for those 5%, their acreage is just over 200 acres in that crop. Cabbage, 7% and 84 acres. We go down to then cucumbers. 17% of the farms have 9% of the acres, and on average 20 acres. And so this information comes from the Census of Agriculture of 2016. The next one is showing the importance of scale again, but now in terms of profitability or margin. So for example, 73% of vegetable production is by only 192 operations, and they all have more than $1 million in sales. But that's only 10% of growers. On the fruit side, 69% of all fruit production is by 170 growers that have $500,000 in sales, and they only account for 13% of growers. So when we look at operating margin or the profit margin as a percent of sales, it goes up in a linear fashion with size on the fruit side. And on the vegetable side, it seems to be relatively constant. But across both fruits and vegetables, if you have sales of less than 25,000, you are really operating in a negative position. So again, scale of operation seems to matter as we look at both the number of operations and financial success. In terms of where fruit and vegetables are located, these charts here just show where are the fruit farms and where are the vegetable farms. So for example, on the left-hand side, we see that Niagara and Norfolk are where more than 50% of all fruit production occurs. And on the right-hand side, we see that Norfolk County is the leader in vegetable production, followed by Chatham-Kent, and then Simcoe and York. And so again, these are just for field vegetables and do not include the greenhouse sector. This is a chart that OMAFRA created many years ago on areas in Ontario that are conducive for fruit production. And so there's a number of areas that are shown here. Some of these areas are along the north shore of Lake Ontario and Lake Erie, and others are kind of a band between Lake Erie and Lake Huron. And the reason for this is because a large majority of our fruit production currently is in the Niagara area, and this study kind of suggested the Niagara area is full for fruit production. That is, if we expand in one crop in Niagara, we're actually replacing an existing crop. So this chart here is designed to show there are opportunities for expansion outside of the Niagara area. One of the things that we found in the study is that while fruit and vegetable production can expand, there are also forces that are kind of contracting production. And this is just a list of the more important ones that we found. Is first of all, there's no business succession by some fruit and vegetable operations. So that means when the operator retires, it goes out of the business. The high cost of labor is also another area that has been identified, particularly when we look at competing jurisdictions and whether or not there can be machine planting and machine harvesting as a way to substitute for the high cost of labor. Scale of operations and the operating margin, as we've shown before, is important. In Ontario, weather risks can hamper production expansion or actually look at contraction. Ontario is a price taker on average for most fruits and vegetables. And what do I mean by that? Which is that the import price from the US or from offshore is the main determinant of pricing and then of resulting margins. And for some operations, the food safety requirements can be onerous, so that the findings are that the smaller the operation, the higher the per unit cost of complying with food safety requirements. So again, supporting scale of operation. This chart here is showing kind of the numerous competitive factors that are at play that affect fruit and vegetable production in Ontario. And this has helped kind of guide some of the thinking in the rest of the project. And I'll just briefly speak about this chart. On the left-hand side, we see the inputs for the fruit and vegetable grower. And so those inputs range from available land, suitable land, access to capital, having agronomic skills, a succession plan in place for the business, the labor requirement and the labor cost, having suitable genetics, and the resulting operating inputs and having access to them, and the resulting profit margin. So as we then flow over to the fruit and vegetable grower, the fruit and vegetable grower either puts product into cooling and storage, or goes direct to a product marketer that they may as well be themselves if they're a large operation. And then we'll see that the produce marketer is competing with marketers with out of province growing operations. So for example, marketers in Ontario are competing with growing operations in the US and Mexico and elsewhere. And as well, we have competing supply regions that are putting competitive pressure on the marketing side, and as well help influence what happens at retail and food service. In the blue box, I have the supply and demand balance and pricing and harvest and post-harvest season. So what do I mean by that? Is that this is all getting into the issue of, because many fruits and vegetables are perishable, and so one has to think about the supply-demand balance in the harvest period and whatever post-harvest period there are, and that additional supply does not disrupt the supply-demand balance and pricing. And we'll see that in some of the examples that we refer to later. But the ability of expanded production not to disrupt the supply-demand balance became fairly critical as we looked at some of the crops. This next slide is a summary of some of the constraints to expanding production that I've spoke about before. So again, some of the constraints we talked about is that Niagara is full. If we think of muck crops, there really isn't an expansion opportunity because that area is full. So it all gets into suitable land, availability of labor, the ability to do machine harvesting, access to capital, having suitable cultivars for Ontario growing conditions, and as well the length of the growing and the harvest season. So for example, if we can have an advancement in the harvest season, we actually have more production potential to meet the marketplace for perishable crops. So these are kind of constraints on the grower side. And on the marketing side, we have a number of constraints as well. So for example, our Ontario-based marketers have to compete with the US and Mexican growing operations, and they can be lower cost. Some of the neighboring US states provide incentives, and we've seen that in the greenhouse vegetable business before, so that always affects the ability to expand or invest in Ontario versus elsewhere. And as well, if you can't obtain direct access to buyers, that does have an impact on profit margins. And one of the things is retailers and food service requires or would like is year-round consistent supply and quality. So this gets into the issue of critical mass and collaborating with other supply chains to be part of a 12-month supply offering. So I want to turn this now to Anna to see if there are any questions that may arise from the first section of this presentation.
Thanks, John. So if you have any questions, please write into the Q&A box, or you can raise your hand in the chat if you prefer to speak your question. So we'll just give folks a couple moments to write in or think of some questions to ask. And you can always, with the Q&A box there, if any questions come up during the presentation, you can write them in at any time and we'll get to them at the break.
I have a comment or a question, sort of both, perhaps. Anna, John, in terms of, I know you spoke to sort of over 40 people along the supply chain. It might be helpful if not everybody would necessarily understand. You had a great diagram earlier on, but perhaps you could just give a bit more, not specific names or anything, but a sense of the where the people you talked to, where they were along that supply chain.
Yeah, sure. Thank you. I'll respond to that. So I spoke to, at the grower level, well, let me move backwards. At the research and development level, I spoke to those that are in the business of supporting the farm sector, whether they're input suppliers or those that are what I call in the research and development function, cultivar selection, plant breeding. Then as well, I spoke to growers, and when we get to the 5 or 6 examples, I spoke to growers in each of those sectors. then as well to marketers and wholesalers, including those at the food terminal, and then as well to retailers. So I wanted to make sure that I had perspective and input from everyone, all entities in the supply chain, from inputs into the growing sector all the way up to the retail channel.
Thanks. That's helpful.
So Anna, should I proceed?
Yeah, there are no questions, so we can move on for now.
Okay, thank you. So next, I'm going to cover the crops we looked at for expansion. So we went through a process based on the findings of what we just looked at, of constraints to production and some of the competitive issues. We looked at some crops for expansion opportunities. So they're listed on this page. There's 3 fruit crops, 3 vegetable crops, and we decided to look at vertical farms because there's investment in the province in vertical farms, and we wanted to look at vertical farming. So in this investigation, I had interviews with individuals and representatives of each of these sectors and through the supply chain. And so the analysis and investigation focused on both the opportunity as well as what are the impediments to realizing the opportunity. So this next chart is a high-level summary for the field vegetables and the field and the fruit crops. So for example, I'll go through this on strawberries. Currently, about 14 to 16% of Ontario consumption is based on the field production. And so the expansion opportunity essentially says we can actually increase, we have a multiple increase of 2.5 times that amount. So that's the opportunity, which then if we realize that opportunity, we'd be supplying 38% of Ontario's consumption with field strawberries. And the incremental value at the farm level is estimated to be in the range of $45 million. So fresh grapes currently are in the ballpark of 1% of Ontario consumption coming from our production base. We see there's an opportunity to expand that by 8 times, which is about a $26 million expansion opportunity. With garlic, you know, that based on estimates, it's between 6 and 11% of Ontario consumption. We see a doubling of that to about 20%, and that's about a $10 to $15 million expansion. On the pears, currently we're at about 12% of Ontario consumption, and we see that doubling. Sweet potatoes were around 50%, and we see a small increase to about a 50% expansion opportunity. And that's worth about $2 million. And on eggplant, we didn't see too much expansion opportunity. And the reason being, it gets into this issue of not disrupting the supply-demand balance that currently exists through the harvest period. So what I'm going to do now is go through each of these crops at a very high level. So with fresh grapes, again, we have an 8-fold expansion opportunity in front of us. What are the constraints? We see constraints being having a fresh grape with attributes that meets market requirements. As well, we have to have more focus on cultivar selection and plant breeding. And as well, the expansion has to be in areas outside of Niagara, and it can be on the north shore of Lake Erie. So some of the factors that we saw that enable expansion would be cultivar selection and or a plant breeding program. And so what I mean by cultivar selection is someone going around and identifying cultivars in other suitable growing areas, and then essentially seeing if that cultivar is adaptable to growing conditions in Ontario. As well, more ongoing promotion through Foodland Ontario. As well, having access to crop protection materials that are available to U.S. growers, and as well, attracting growers outside of the Niagara region to expand production. So because most fresh grape production is within Niagara, it's really kind of transferring that know-how to other fruit growers outside of the Niagara region. On the pear side, we had about a doubling of production possibility, and we see the constraints there are some disease-tolerant varieties, more investment in high-density production because it's more economical, And then when we go to the retail side is the display and appearance of pears in the retail channel. So just the positioning and marketing of pears in the retail channel was identified as a possible constraint. And as well, having more controlled atmospheric storage for a longer marketing season, because pears are storable. And so the more controlled atmospheric storage we have, the longer the marketing season. And then we found that suitable land is not a constraint, that there's a lot of land area in Ontario that's very suitable for pear production. So the factors enabling expansion, you've seen some of these already about cultivar selection, and as well promotion through Foodland Ontario, and here access to crop protection materials available to US growers. So we'll see that as we go through some of these, a lot of the factors that enable expansion are fairly similar. When we go to strawberries, we see about a 2.5-fold increase in annual production, so that we can actually have about 37 to 38% of Ontario consumption by field-grown strawberries. So the quality of our local production is an opportunity, and particularly, and as well, we see that having greenhouse strawberries shouldn't be viewed as a threat, but should be viewed as a complement for the November to June period. And why do I say that is because the expansion opportunity is with what we call day neutral strawberries, where we can have strawberries growing into October. And so having greenhouse strawberries as part of the complementary supply is all about having a supply chain that can deliver Ontario-grown strawberries 12 months of the year. So the constraints are really competing with lower-cost California strawberries and accessing retail shelves with day-neutral strawberries. And the reason I say that is because retailers do a very good job with our what we call June strawberries that are coming off now and into July. But less so with the day neutral ones. And as well, then the offering of a critical mass of strawberries to retail buyers. So this is getting into the issue of retailers like dealing with only, one buy or one supplier. And so that the opportunity is providing critical mass, through our field strawberries in conjunction with greenhouse strawberries for 12-month offering. As you look at the constraints are fairly comparable to what we've seen before. So critical mass comes out, again, cultivar selection and access to crop protection materials. Switching now to the vegetables on garlic, we saw an opportunity to expand or double our production base to supply about 20% of garlic consumption in the province, and it likely could be more. There are some constraints to that. One is the seed supply and the ability to actually multiply seed. It's because the seed is really the clove, and so there are some issues there. Production is basically reliant on one cultivar, and so having some more cultivars may be beneficial for Ontario. The big issue is really competition of low-cost Chinese garlic. And in fact, the garlic market is really segmented into Chinese garlic and non-Chinese garlic. And so Ontario is really competing in the non-Chinese garlic sector, but the very low-cost or low-priced Chinese garlic does affect the size of the non-Chinese garlic market segment. So as well, we need some productivity gains required to lower the cost structure, and we need more storage because proper storage is required for garlic once it comes out of the field. And again, to service major retail markets, we need critical mass. And so these factors that enable expansion kind of flow from the constraints, and you'll see again some similar themes: controlled atmospheric storage, cultivar selection, plant breeding programs, promotion through Foodland Ontario, and access to crop protection materials available in the US. With eggplant, we saw a small opportunity, and the reason being is because didn't want additional eggplant production to disrupt the supply-demand balance. And so again, we're competing with lower cost imports and a need for a critical mass to service the major retail markets. And again, this time there's competition of greenhouse grown eggplant. And so the factors that enable expansion is really for the growers and marketing having a critical mass of eggplant for retail accounts and retailer support for the Ontario grown eggplant. So that, that we saw that, or at least that I saw that significant expansion would likely be disruptive to pricing and the supply-demand balance in the harvest period and would be counterproductive. On sweet potatoes, currently we're about 50%, and that could possibly go up to 20% higher. So there are a number of constraints with sweet potatoes. First of all, we're growing a subtropical plant in Ontario that does then increase our operating costs compared to North Carolina. And North Carolina is the largest supplier of sweet potatoes in the US and is a big supplier into the Canadian market. And as shown in point number 4, that the US market has an excess supply of sweet potatoes, and the Canadian market being nearby is kind of, they view that as their market outlet. Expansion also has very high capital costs, both for equipment and for post-harvest curing and storage. And again, if anyone is expanding, they need the critical mass to be part of a supply chain to serve the retail market. One of the concerns was that if the expansion wasn't by a supply chain that is supplying major retail markets, the additional production could be disruptive to the supply-demand balance and then the impact on grower returns. And we'll see that the factors enabling expansion are the same factors we've seen before. The last one we looked at is vertical farms. So vertical farming is just a little different. And so there is expansion opportunity in Ontario for microgreens and leafy vegetables. We've identified at least 6 vertical farm operations in Ontario, some of them located in the western part of the province, some of them within metropolitan areas, and in fact, 1 or 2 actually in Guelph, Ontario. And industry estimates suggest that current sales could be in the $50 to $100 million range across Canada. But there are quite a few constraints for expansion that have to be overcome. First of all, the price point at retail is pretty high. It's $3 to $5 for 50 grams, and minimal promotion of these attributes to consumers at this stage. There's very high capital costs for both the shipping container type of vertical farm and the enclosed vertical farm in a building. Energy costs are quite high, and the lighting systems are being perfected to lower those energy costs and to maximize crop growth. And so scale of operations does matter for both the cost of capital, or the cost of building the business, and for market access, because needing access to retail accounts, or for the smaller ones, access to the restaurant sector. The interesting thing is, for some of the crops, is looking at what are your operating costs in relation to the next best alternative. For good parts of the year, the next best alternative is greenhouse. And so those operating costs have to be looked at relative to that next best alternative. Because it's a massive investment, constraint is really get a requirement or commitment from a customer prior to investment. And in these indoor growing operations, it's particularly the high-tech ones, the need is for very specialized labor, and that labor component is much different than in a greenhouse. And as well, there's hundreds of millions, if not billions of dollars being invested around the world in vertical farms, and the technologies have a lot of intellectual property protection around them. And so given venture capital is investing a lot, one of the risks is whether a disruptive technology comes along, that actually may result in a much lower cost technology within a vertical farm. So some of the factors that will enable expansion is, the first one is understand why vertical farms have failed. In the US, a number of vertical farms have failed and gone bankrupt. And to really understand what are those business reasons why they went bankrupt, I think is critical. And as well, I'll just make point number 2, is there has to be, when you begin operations, there has to be a market focus. What's my market that I'm serving? And what's the technology and the skill needed for that market that I want to serve? So as well, I would say that, those are the high level findings from the vertical farm. So Anna, if I can turn it back to you, if there are any questions on the material that I just went through.
Yeah, there are quite a few questions. One actually was a commented question that came in for the first section that we just missed. It's one of the key reasons is the COP in other jurisdictions. Revenues in one area may not be reflective of net return and EBITDA. It would be great to talk about net profitability for these types of operations. Also, is there an influence of currency on the competitive nature of the sector?
So, yes, currency does matter. As in most of agriculture, when Canada has a 70-cent dollar, we are more competitive than when Canada has a 92-cent dollar. And I would agree that having measures like EBITDA, or earnings before interest, taxes, depreciation, amortization, across these crops would be very helpful. The information, the public information, does not provide that. At best, we have budgets that are provided by our MAFRA, and so we don't have access to financial information like EBITDA or some other financial indicators.
Another question here, for the grape market or any of the markets, where is there information on factors for growing success? So fertilizing requirements, crop protection, etc.
Yes, so there's information provided. I would direct it to two sources. One is OMAFRA, and as well to the organizations that represent those commodities. So for example, on grapes and pears, that there are, as I understand, there are budgets that are available, and as well recommendations or suggestions on levels of inputs. And as well, there are OMAFRA specialists, that crop specialists that could provide that information. So I would say OMAFRA and supporting commodity organizations.
Is there any production or other need for these new crops to be grown in the GTA near to market, or can it be anywhere in Ontario and trucked into those markets? Trying to compete for urban demand for farmland in the GTA could be challenging.
Could you repeat the first part of the question?
Is there any production or other need for these new crops to be grown in the GTA near to market, or can it be anywhere in Ontario and trucked into those markets?
Yeah, yes, those all of these crops can be grown. Well, for example, some of the fruit crops can only be grown in certain areas because geography and soil type matters. Vegetable crops have a little more flexibility, so some of them can be grown in the GTA. Some of them can be grown, across southern Ontario, southwestern Ontario. So proximity to market is really a combination of the cost of land, the suitability of land, and freight costs. I would say that for vertical farms, the consensus is that the vertical farm should be close to market, given the economics of vertical farms.
And we'll take one more before we move on. How are the expansion opportunity factors determined, e.g. 8 times in strawberries, 1.2 times in sweet potatoes?
Sure. So what we did is, for example, we looked at the perishability of a crop. So for example, if we take fresh grapes as an example, there's so many weeks of harvest period. And we looked at, so for example, if we have, let's say 7 weeks of harvest period, and then if fresh grapes in that harvest window has a 50% market share, that would end up being the opportunity. So that was kind of the procedure that was taken by crop. One, is it storable or is it perishable? If it is storable, what's the length of the storage season? And then if it is storable or if it's perishable, what is the market share that can be expected for that crop in that period when it can be marketed? So those were the factors that we looked at for the expansion opportunity. And this goes back to not disrupting the supply-demand balance while the product can be marketed.
Great, thanks, John. So in the interest of time, we'll move on to the last section, and other questions we'll answer at the end.
Thank you. So the last section is to say, so from the first two parts of the research, you know, more what I call the context and framework building, and then the findings from the various crops that we looked at. Then we looked at, okay, what are some of the actions required to actually make this happen? So we've segmented this into actions by various players in the supply chain. So starting with retailers and food service buyers, there's two areas in that sector. One is more in-store signage and promotion of Ontario grown. And so then it's suggesting an action item of Foodland Ontario working with retailers for better display. And the second one is demand pull and commitment from buyers. And so the issue there is to say, before there's an expansion of fruit and vegetable production, to get some commitment and from retailers or demand pull from retailers or food service buyers can be very helpful to support the expansion opportunity. And so that again is kind of under the theme of not trying to disrupt the supply chains or the supply-demand balance that's there at the harvest period. We also had actions for at the grower level. And so the first one gets back to the critical mass question. And this is really getting into the issue of being part of a supply chain where you can offer critical mass. You know, so whether it's through collaboration with others, whether it's through, you know, a broker, whether it's through another grower that has access to the marketplace already, but essentially, you know, having a critical mass of the supply chain offering. The other one is in the fruit and vegetable business, the way product is marketed is not like it is in the grains and oilseeds, where you show up at the country elevator and you've got a very liquid price and a very what I call fungible product. In fruit and vegetables, it's really based on relationships with the buyers. And so expansion, you know, should occur in supply chains where the seller, you know, has a relationship with buyers. So essentially it's kind of building on existing relationships so that one isn't, let's say, taking prices at the bottom of the barrel. The next one, it talks about the non-disruptive nature of expansion is just to make sure there's a market outlet and that additional volume will not be disruptive to the supply-demand balance. Because if it is, it's lowering prices not only for those people expanding, but also for existing growers. And the last one is loyalty is a two-way street. What do I mean by that? Is retailers want to be loyal to growers, but the converse also has to apply. So for example, when the exchange rate drops to 62 cents and you can make a much better EBITDA moving some of your product into, let's say, the US market, you know, that's taking supply away from your retailer that had a commitment. So it's not demonstrating kind of loyalty on the flip side. So that's just kind of talking about loyalty being a two-way street and working with each other through good and bad times. There's quite a role for industry associations. You know, as we go through some of the constraints and some of the factors that support success. The first one is talking about facilitating collaboration within the production sector. And so what do I mean by that is, for example, you know, with more, so grower organizations can facilitate the collaboration. There can be partnerships between growers as well. And so, for example, you know, some grower organizations are also in the business of marketing, but collaboration within the production sector to provide critical mass can be very beneficial. The next one is recognizing a diverse pool of next generation growers. So this gets into the succession issue where there are no succession plans to keep the assets, that is the land base or the farm, in fruit and vegetable production when there's not a next generation. And so this is getting at the idea of identifying younger growers in the industry and trying to identify that talent pool to continue field-grown fruit and vegetable production in Ontario. Because there are some very good, let's say, individuals with the skills that may be part of input suppliers. They may be working for another large grower operation right now. but essentially trying to recognize that diverse talent pool so that we do have a continued supply of what I call next generation growers. Another one is there's established supply chains and trying to encourage them to invest in growing operations in Ontario. So for example, there are Ontario-based growers that have operations in Ontario as well as in the US. So encouraging investment by these growers in Ontario versus elsewhere, or those that have headquarters in the US, they may be looking or could be looking at Ontario as another supply region for their continental supply offering. So a number of the large growers have continental supply chains. That is, they have diverse production regions and are supplying product, to retailers not only in Ontario, but also in parts of the US. And so encouraging them to look at Ontario as part of their production base for supplying fruits and vegetables 24 or 12 months of the year. The last one may be controversial for some, but it's to encourage strategic investments for farmland investors. Farmland investment companies have invested in farmland and are leasing some land to fruit and vegetable growers. And the action there is for applicable grower groups and municipalities where applicable, identify growers looking to exit the business and actually introduce them to farmland investors that have an interest in participating in expansion of profitable fruit and vegetable production. And I know there are some farmland investors that are interested in that, so there may be a win-win. So on the research and development side, there are two broad themes. One is extend the length of the marketing period, and that can be done by cultivar selection or plant breeding programs that either lengthen the growing season or actually allow for longer storage. Some product attributes allow for longer storage, as well as some R&D in storage protocols that extend the marketing season. And the last one is varieties that provide beneficial attributes for growers and consumers. So again, cultivar selection or plant breeding that actually provide attributes required by growers, which could be a longer harvest period or earlier planting, or could appeal to buyers and consumers, which attributes such as quality, freshness, crispness, storability, those types of things. On the government front, we have a few actions. One is a more level playing field for crop protection materials. We've talked about this before, but this is really about allowing for registration of crops in Ontario that are already considered safe and efficacious in the United States. The next one is encourage retailers to merchandise Ontario grown produce. So this is for, and this is really creating incentives or regulations. So OMAFRA could investigate the use of investments or regulations and working with retailers to increase the amount of Ontario grown produce sold in food service and in retail. So this is really getting into the issue of kind of nudging and creating incentives, to have more Ontario production in the retail channel and in the food service channel. The next one is provide information to the grower community on suitable growing regions. So this question was asked already. So I had that chart up for what OMAFRA put out 20 or 30 years ago for where fruit production could occur. That could be updated. And as well, one could be created for vegetable crops so that it provides an information base to growers for areas that are suitable from a geographic point of view, from a climate point of view, and a soil type point of view for field grown fruits and vegetables. As well, there was a question about EBITDA and inputs. So OMAFRA does have some budgets or cost of production estimates, for some of the fruit crops and some of the vegetable crops, and that could be expanded for a broader set of field-grown fruits and vegetables to help decision-making by growers as they look at expansion opportunities. And the last one there is on more information on wholesale prices for fruits and vegetables. So InfoHort does provide that information coming from the food terminals, and OMAFRA could collaborate with InfoHort and actually provide more price information on Ontario-grown fruits and vegetables and an expanded set that could be very beneficial to growers. The last action area is by landowners. And so this is then to offset the high cost of land through lease arrangements. So I talked about farmland investors already. And so they could, through grower organizations, highlight the benefit of actually being in a long-term lease, you know, versus an individual grower putting out $20,000 to $30,000 an acre for expansion of their operation. The next one is looking at the Pickering lands. There's 6,000 acres in right now is corn and soybean production, a bit of sweet corn production on the Pickering Airport lands. They don't have long-term leases like 20 to 30 years, but if the federal government or Transport Canada provided 30-year leases, I'm sure that a few tree fruit growers, such as apple growers, would look at that as an area to expand production. And as well, there can be vegetable crops grown without needing a 20 or 30-year lease. And lastly, there's some idle land in parts of Ontario that used to grow fruits and vegetables along the north shore of Lake Ontario and a bit of Lake Erie. And so the action there is some selected municipalities could identify idle land and develop action plans that provide linkages between owners and farmland investors to actually support the expansion opportunity. So now I just have a high-level summary. So this this report that is provided, it says a couple of things. One is there are opportunities for expansion of Ontario fruit and vegetable production. You know, that's a given. But the findings suggest there are certain prerequisites that need to be in place to realize that opportunity, and we've identified those. And that there's a role across the whole supply chain from growers, marketers, retailers, industry associations, R&D folks, and government to be able to realize this opportunity set. And with that, Anna, I'd like to turn it back to you.
Great, thank you. So I'll first just address, there's a couple questions asking if the presentation will be available, and yes, it will be. I'll send out an email afterwards with the slides and the recording. Also note that we did release the full-length report yesterday, so if you didn't receive it, I'll include a link to that report as well in the follow-up email. So getting on to the questions, other than protecting the land base, is there an immediate role for land use planners to encourage expansion of these crops in Ontario? It seems like the issues related to labor, market competition, and grower preferences are beyond the scope of land use planning.
So as I listen to that, Anna, that seemed to be a comment more than a question.
Okay.
The only thing I would say, just because I think there were a few things you said earlier on, but certainly in the last slide, you noted that productive idle land, so land that used to be in fruit and vegetable production and it's now sitting idle, and is there an opportunity for municipalities to proactively sort of help market that and make farmers aware that it's available so that people who didn't know might actually take it up? So that was one thing you talked about. There's also just from a land use point of view, sort of the whole, for those of you that are in the Greater Golden Horseshoe, you'd certainly be aware, I'm guessing if you're a planner, about the push from OMAFRA around recognizing there needs to be an agri-food network, there's an ag system. And so what municipalities do, it's not just about protecting the farmland for production, but it's also looking at the entire chain and making sure that they do what they can do to support that chain, so that you make sure that people that are along the chain don't also disappear because they face barriers of some type or another. So there are other things to do in that vein. So
Kathy, thank you for answering that question. So you know, now that I've thought through what you said,
yeah.
The simple response is it takes more than land. That is only one of the inputs. And if we return to that one, what I call that competitive framework chart, there's 7 to 10 inputs that are required for actual fruit or vegetable production, land being one of them.
And it actually relates to another question we had here. Is the idle land not being farmed, or is it in non-fruit and vegetable crops?
Well, I think that the answer, the idle land is not being farmed, but it raises the larger question, which is that there are some acres in Ontario that are only in, let's say, corn and soybeans and wheat, and could be in higher valued crops. That's part of the reason why I started the introduction to say, you know, here's the value or revenue per acre for fruit and vegetables of, you know, on average $4,000 to $6,000 an acre, you know, for vegetables and fruits, but could be much higher. But in contrast, on a grain and oilseed farm, you know, that it's a $800 to, let's say, $1,500 an acre, depending on what you grow and the yield and the price in that year. So that there's much more value per acre by shifting into fruit and vegetables.
There's one here on the more extreme side of intervention. Did the report consider the possibility of government-led quota for domestic production?
So this is not so the report is ideas in the report come from JRG Consulting Group and not the Greenbelt, and so I only went as far as about looking at incentives, nudging, possibly regulations for more Ontario fruit and vegetable, just to start the conversation and the nudging of having more local production, while still recognizing, you know, that the prices of imports are a constraint to expansion in some areas.
Okay, so I see we're at time, so I'll just share two comments here from some attendees. I would suggest another action by governments would be to assist direct farm marketers who are selling fruit and vegetables directly to the consumer. And then there was another comment, I'm surprised that for R&D there is not more focus on the high cost of labor and investing in technologies to reduce the COP, labor being the main one. So with that, we'll pass it on to Kathy to finish things up. And for any remaining questions or any more that come up, please feel free to email us and we will answer them offline.
Well, thank you, and I will put it back to Kathy.
Yes, thanks very much. That's a lot of information to take in. So do feel free to raise additional questions or comments with us. We'd be happy to receive them. And please take a look at the full report, because there's a lot of information there that you'll notice some commonalities in terms of both the constraints and the opportunities, but some are unique to the individual crops. Those that are more common may help you in thinking about other crops that are grown in your region already and might be relevant to them. Thank you very much for participating. And as Anna said, look on our website, but she will also send it out with a recording of this webinar for you. So thanks again have a good afternoon. It's sunny in Toronto. I don't know about where everybody else is. No rain yet. Have a good day.